David, Dow 40,000. I know a lot of people say that it's not a great measure of the overall market. The S&P and the NASDAQ are better. But, David, Dow 40,000 is still a big level, record highs across the board. Should investors think about taking money off the table?
We think you want to take a longer-term perspective. And if you take that longer-term perspective, stocks are going to be a very good place to be over the next 3 to 5 years. But we think, importantly, they're going to be a good place to be over the balance of this year. However, this would not be the time to jump in with new money. We think we're probably at the higher end of a short-term trading range. You probably have 3 to 5% upside, 5 to 7% downside. At some point, the market's going to pull back again. But we do think the fundamentals for this year are good. We think interest rates ultimately go lower. Inflation, while not a straight line, is going down. Corporations are doing well. Fundamentals are good. Earnings are good. So we think that's a good environment for stocks. We just wouldn't get caught up in the mania of this month.
Let's take us through, David, your word of the day.
So the word of the day is breather. The market has been on a tear in May, and we just think it slowed down a little bit yesterday. We think it probably slows down again today. We think the word of the month is probably buoyant, which the market has been focusing on the good and ignoring the bad. And that typically is a sign that you just don't want to get caught up in the excitement. Again, there are lots of places in the market that haven't done as well. We think the market is going to start to broaden out, and things that didn't do as well will start to catch up. That's where we would put new money. We wouldn't chase the winners.
Okay, so if you're not going to chase the winners and you don't want to put new money in the marketplace, if you were to look at some parts of the market that might become attractive to you on any kind of a pullback, what would they be?
So we think healthcare has done poorly over the last 12 months. We think that probably is going to be a better place to be. Utilities have started to do well. We think that will have some legs. We think financials, which also have been perking up, are going to continue to spread out. We like select technology, but beyond the macro sector look, in terms of places, we like small cap, which have not done nearly as well. We like international. Dividend stocks have been a particularly poor laggard over the last 12 months. We think that's going to be a good place to be. We like value versus growth. And then you want to look at individual stocks. This was a very odd earnings season. Companies that made numbers did okay. Companies that missed numbers got rocked. We think you can look at some of the recent laggards or losers as a place to make money over the next 12 months. And we think there are a lot of them. Cisco yesterday had a pretty good number. The stock was up $3 pre-market, closed down $1 for the day. We think it's very well positioned for the next year. You're getting a 3+% dividend while you wait. We would buy into that weakness. There are others like that.
Now, if it's just Cisco, it's just going to be Cisco that you've highlighted there. You mentioned other value parts of the market. Are there certain stocks that you like as well?
Sure. Again, companies that did well in earnings season, but the market didn't like a PayPal or a Zimmer, both had very good earnings, good outlooks, yet the stocks have trailed off. Their stocks are at very reasonable valuations. We think that's a great place to make money. We could see PayPal, which has new management, has turned themselves around. We could see that 30 to 50% higher over the next 12 to 18 months. One company did poorly this earnings season and really had a bad quarter. Management misstep to Starbucks. That stock is sold off very significantly.
Sure.
We think it's a great franchise. We think they sell an addictive product. You want to get in now while they've got problems. They're going to fix the problems over the next 12 months. We think the stock easily can be back over 100.